Welcome, guys. I was on time this time. But okay, thank you for joining on YouTube and on GoToWebinar. Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of Tradespoon and Yellow Tunnel. And today we're going to have a live trading room open to trade stock and options using our technology. Before we begin, let me know if you guys can hear me and see my screen. We'll begin shortly after. Sound is good? All right, then I think we can start. If the sound is good, then we can start. Hello, does the sound good on YouTube? I assume it's good. All right. Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of both companies. And today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. The difference between Yellow Tunnel, Tradespoon, and maybe some of the other services is that we are heavily invested into technology. My background is technology. I was a CTO of several publicly traded companies. In fintech space, I built a team of financial engineers that constantly build and use new minds and neural networks to come up with the signals in the market, short-term, medium-term, and long-term signals. And then I use these signals to trade in a live trading room. And I've been doing it for over 20 years. And Keith has been doing it probably even longer. Actually, we're the same age, so probably the same time. But anyway, disclosures are very important. Please read them. Trading stock and options involves risk and not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA or CC. I'm showing you what I do in my own account based on my own reasons, talents, law for general education information purposes only. Okay, let's jump into the trading. Okay. So looking at the stock forecast toolbox, we have CPI data today, right? The inflation data. Everybody's concerned about inflation. Markets still shows a positive trend. Pretty strong momentum to the upside. 596 is support, 604 is overhead resistance. We were at 597. Let's see where are we now. Spiders is at 597. So model is doing a good job that, we're kind of consolidating after the reaction to the elections. Right, 586 is your support. As long as we're above 586, it's the pattern of higher highs, high lows. You can see every time market tries to pull back, it's not, bulls are stepping in and buying. Again, the only thing that, today, yield curve normalization, right? After the CPI data, 2 yield dropped, 10-year rallied. So you have steepening of the yield curve, that's usually a positive sign. 10-year is still elevated around 4.5, not sure why, right? One of the common explanation, again, tariffs and uncertainty about the new administration, right, in terms of the magnitude of some of these changes. And I think that's still a concern. Dollar continues to be strong, right? Continues to have a strong performance. We're close to, we're testing 2023, 2024 high. That's usually not good for the markets, right? So especially if the dollar breaks 107 level, if the yield breaks through the 4.5 level, at some point, I think people are going to start asking, well, why, right? And at some point, I don't know if we're going to have reactions similar to Europe, because Europe is in trouble, right? Europe kind of a sharp pullback, also sitting at 2024 lows, right? But we could have something similar, right? For now, there's some signs of bond distress in the bond market in Europe, not in the United States, but usually U.S. economy is dependent on European. It is dependent on the health of the economy in China, and without China, without Europe, at some point, AI might not be enough to carry the trade forward. We do have NVIDIA, so CPI. I assume PPI is going to be something similar. No big reaction. Retail data, may or may not spark concern about health of the economy and consumer. And then I think the big event is unemployment, well, not unemployment data, the NVIDIA earnings, right? Because usually market pauses, consolidates, then NVIDIA earnings, market continues to rally, right? So big, if NVIDIA has earnings similar to Pelletier, then all aboard and market will go higher. If it's going to be, if it doesn't look like Pelletier earnings, then we might have issues. But we'll see. Now, right now, NVIDIA also, I think, making new highs. Basically, most people are still bullish on AI and think that we can continue making new highs. But, very important earnings coming up on, this is Monday 18th, actually. Is it 18th? 7 days from now. I think it's, I don't know why. I probably need to zoom out. Sorry, I probably have to change it to a day because it doesn't make sense. Yeah, 20th. I thought it was 20th. Yeah, so next Wednesday. So a week from now. Alone, Brad, John, Cool, Elite, Ted, welcome back. All right, so that's economy, macro. Bitcoin close to 100,000. We talked about this before the election. It seems like 100,000 was very far and away. And we're almost at 100,000 with 94,000 print. So Bitcoin is alive and leading the market, one of the strongest sectors. Banks are doing well, where banks continues to make new highs. So XLF, marginal new highs. Industrials are doing well. Some of the transportation sector is doing well. So we do have, a lot of, that trade, the elections trade is still alive and strong. Let's see, materials pull back. Materials pull back. Probably one of the reasons weakness in China, right? China is weak. It continues, broke through the support level, right? Close this gap. I mean, next gap is 28, right? Next gap is 28. If it doesn't hold this 50-day moving average, next gap is 28, basically elevator up and then elevator down. VIX is at 13, so no fear, right? We kind of, fear is removed from the market for now. Strong dollar, junk bonds are stable, which is good, but still below 50-day moving average, which is not that great. And probably there's some trickle effect from Europe going into the junk bonds, at least for now. But that's a sign of weakness. Let's see what else is interesting. Industrials, we said, is all-time high. We talked about dollar multi-year highs. Not great. Consumer discretionary continues to rally. Following Delta Airline and the, some of the railroads. I think today was Signal NSC. NSCs looks like a very strong price pattern. Railroads. QQQ broke through all-time high. It's been a week, still staying above the breakout level 500. And as long as we're above 500, it's a pattern of higher highs, higher lows. Semiconductors is a head scratcher, right? Usually, semiconductors are leading all the rallies, and they continue to underperform. I looked at Texas Instruments. I got into that trade. That doesn't look really good. So that's a head scratcher, right? Usually Bitcoin is up and QQQ is up and semis are leading, along with NVIDIA. They have been one of the weaker asset classes, and that's a elephant in the room, right? if that's the right expression, but that's a head scratcher, right? Like I scratch my head and like why semis are not going higher. They're usually the proxy for the operating system of the economy, and so I don't know, maybe after NVIDIA, and which will be like a trigger, right? And it could push semis to 280 because they're underperforming after the earnings, or we could be 220 if NVIDIA, or 230 if NVIDIA disappoints. It has a lot of weight in the semiconductor space. ETF. Value stocks in general are doing well. Everything but growth continues to leave. It's those industrials, banks we talked about. Gapped up, new highs, confirm the breakout. Still trading high. Dow Jones is similar price pattern. What else? Utilities, safety asset classes are underperforming. XLU, XLP underperforming. Not all XLU. Like I start seeing these signals in XLE, SRE, right? That looks like a strong. So there's not all utilities are made equal. There are some that trade like Bitcoin, and I think there was another one today. Let me see. So the airline, MasterCard, so corporate cars, railroads we talked about. I thought I saw some media starting. But yeah, MasterCard, Visa, that was a signal. I looked at MasterCard, Visa, strong retail consumer, right? Everybody has jobs, and MasterCard and Visa are, kind of in vertical move to the upside. Visa, and then I think Synchrony Financial was a strong signal. Yeah, Visa looks good, and then Synchrony Financial. All of these stocks look strong to me. All right, any questions? Small caps are, they're doing good, right? Strong. They're, this is the Bitcoins of the world. They're beneficiary of new administration. Big gap up. The open parent held. It's going to all-time high. It's not that far from all-time high. If you look at, we are at all-time high, basically. Not that far away. Energy is up today. XLE is approaching, finally recovering. I think I have a position at ExxonMobil doing better. Silver is still weak. And this is, again, concern with the interest rates. Elevated interest rates. So it continues to be weak. Still maintains this uptrend, but it's been a week under 50-day moving average. We've seen this price section before. Usually it rallies, but it needs a drop in interest rates. And CPI didn't cause that. Powell lowering interest rates did not cause it. So, these elevated interest rates might be sticky and stay here for longer than we anticipate. So silver would be at least I'm concerned about silver. Trading, one of the reasons I closed it. Amazon looks strong today. Consumer discretionary after earnings. So Amazon is vertical move to the upside, doing a catch-up trade. Are people looking for bargains? Amazon has been I think it's broke to all-time highs. So Amazon is all-time highs. Yeah, 150 was a good buy this year. All right, if you did Shopify, let's see. So I think what we do, 110, 120, no, 100, 110, 120. So at this point, this is a profitable trade. If you did that butterfly, then I would get out of the trade. 113.41. That's this flat. All right, good. Let's review the other positions. All right, so Netflix I got filled finally. I said as we're approaching the earnings, the bid and the time premium decay accelerates and basically at the maximum profit. So this was good trade. I'm out of Netflix. And W&B, I rotated out of ExxonMobil. I mean, they reduced my exposure to ExxonMobil. I rotated to W&B, and that was yesterday, right? And W&B pulled back today. I mean, you still have the elections gap, so as long as it's above 54, I'm not worried, right? But I'm monitoring. Texas Instrument, I'm a little bit concerned. We're at 50-day moving average. Semiconductors, that's a head scratcher. Probably should have bought NVIDIA instead of Texas Instrument. But it was a signal. That was a good signal. It's giving up. Well, it's still above the earnings, right? So it's still above the open print on earnings, but it's closing the gap after the elections. So that's not a good price pattern. So monitoring, we'll see. 50-day moving average holds, and let's look at the position. Let's look at the position. It's not the most liquid name, so even I wouldn't read too much into it. But still, you want to see where possibly support could be. I mean, 50-day moving average is usually the most favorite candidate. But let's see. Well, this is Friday expiration, so let's just do December. Going to December. So we're at 206, right? So you have decent support at 195. Decent support at 195, 200. So somewhere between 195 and 200, you do have a lot of open interest. 195, 200. I mean, 195 is 2 standard deviation. That would be concerning. I mean, 200, I think. I mean, bulls want 200 or 205 to hold. There's not much support at 205. What do we do it? I mean, oh, sorry. This is what? Oh, this is 220. This is 210. Last price is 206. Sorry. Sorry, 200. Sorry, 206. Am I seeing this correctly? Right, 206. Sorry, 200 strikes. So there's a high open interest at 200. High open interest is 200. So I mean, basically, if the 50-day move, if the 205 doesn't hold, 50-day doesn't hold, then the next level is 200. But hopefully the 200 level, 205 level will hold. And over the 205 strike. Okay. Any questions? All right, that's Texas Instrument. Any questions? Actually, let's look at the data. Texas explain. Oh, it was cashed. So 205, 207.5. Okay, so this was a cash finish. Okay, never mind. So okay, so 207.5, 205, and largest position is strike 200. Yeah, so if 206 doesn't hold, which is the 207.5 and 205, there's not much gamma in these strikes. So the next would be 200. Yeah, there's not much gamma into it here. All right, so that's Texas Instrument. Let's see what else. Only have 7 positions. Oh yeah, they only have 7 positions. Okay, so only left was United Airlines as the spread. So all the spread worked out well. That's good. So United Airlines probably will get a 75-80 spread, probably going to get filled as well shortly. It's trading at 430. Trading at 430, might as well get out of the. It's over 30%. Fill Wells Fargo or 350. I don't know. Wells Fargo tried to buy 350, but never got filled. United Airlines, I have 480. I mean, I can get out of it at 430. And 75.80. Oh, wait. I mean, you can get out of it $4.30, which would be a 30% profit, or if you don't have a lot of positions like I do, then maybe you wait till maybe get another 50 cents. So that's United Airlines. Let's see. LA Lilly. LA Lilly. I mean, it's the bad news is that it didn't have good earnings, and the new administration doesn't help. But the good news, it's still a popular product, and it's not making any new lows, right? So kind of this type of consolidation. It just needs the good news, maybe earnings. But for now, I'm waiting. Morgan Stanley continues to trade well. Right, we made new marginal highs. I trimmed the position. I don't have Wells Fargo. Okay, so I'll wait. Still have Morgan Stanley position. Texas Instrument we already talked about. United Airlines we talked about. I think we talked about WMB. And then we talked about ExxonMobil. From long WMB and ExxonMobil. Let's see. It looks good, right? It's back above this line, so maybe next level is 125. Maybe it'll break out. Let's see, crude oil. How's crude oil doing? Crude oil is not doing well. Okay. I guess everybody thinks that the new administration will just open the oil spigots and crude oil is going to continue to go lower, but I guess ExxonMobil should go higher. I'm not sure, but how Schlumberger? Drill. Schlumberger. It did rally after the elections, but still doesn't look very strong as a stock. Okay. So maybe Visa. I have a signal from Visa. I don't have any consumer discretionary. Visa looks strong to me. Visa or Tesla? Tesla. People like Tesla. And it looks similar. Okay, I'll stick with the signal. Visa is a signal, right? It's MasterCard. Visa was on the list. Visa looks stronger. $310 stock. I don't know, with options might be difficult. Maybe Synchrony Financial, maybe it's better because it's only $65 stock. Then maybe if you do 50 shares, maybe you can trade options. So that is another consideration, right? When do you buy one versus the other? If it's a $300 stock, options are expensive, right? If it's a $60 stock, well, options are more affordable. And if you have a smaller account, then maybe. So let's stick with Synchrony Financial. It's pretty liquid, I believe. Yeah, it's pretty liquid. All right, so again, I mean, if you're short-term aggressive trader, I would be concerned if we break the lows, 63.50. If you're a long-term trader, I would be concerned if we, break the 50-day moving average. I mean, 10% move. I mean, I think something has to happen. So it's, if it gets to the, my point is that if it at least approaches or slightly breaks the reactionary low after the election, I propose to risk 1% of your account. If it's $10,000, you don't risk more than $100, right? So let's say your stop loss is roughly $2 divided by 100. So, okay, you can buy 50 shares, right? You can buy 50 shares. And then I would sell half of the shares if it reaches the new all-time high, which is 67. So, okay, so let's just do 2% would be $1.20. So that's 66. That would be $2.20 would be 66.60. I mean, secondary financial is volatile. Can be volatile. And then maybe the other half of the shares sell if we retest all-time high, right? Which is, let's call it 67.20. Okay, so those are the signals from today. Probably, I mean, obviously I have to carry it overnight. But, I mean, I guess next big news is NVIDIA earnings. Any questions on synchrony financial positioning? Right, positioning is the most difficult part, right? Because if it drops and you're down 1%, you can think about it. Maybe you want to add, maybe you want to subtract. If it drops and you're down 2.5%, you have to close. Right? You have to close. The markets are overbought, right? Any negative news, the market will pull back. So you want to be kind of prepared for that event if it happens, if and when it happens. Any thoughts on fading Pelletier move? I mean, this is fading Trump move, right, or new administration move. That is not my style of trading, right? When I see such a strong momentum, right, you don't step in front of the train, especially on the most popular stock, right? I prefer find a weak stock, like maybe some of the consumer staples. If you want to short something, then you short some consumer staples because they're weak and people don't want them. Shorting strong stocks that everybody wants, timing it, very difficult. Very difficult. Right now, I would be shorting XLP. I mean, maybe XLB you can short, or any of the components of XLP and XLB, because they're short, people don't want to buy them. They go up, you sell them. But Pelletier, fading Pelletier move, it's just, I mean, maybe obviously it's overbought, but timing it and going against the crowd, like same thing with Tesla. Like, I never short Tesla. Right? I would never do it. Right? And yeah, I understand why people short it, and it's a very popular short, but I know a lot of them get burned most of the time. Being long stock, obviously you can get through these large drawdowns, but you know that eventually, you're going to be on the right side of the trade. So that's just my opinion. But I know a lot of people short Pelletier, a lot of people short Tesla, but they're just different types of mindset. A lot of it is personality, right? A lot of it is personality, right? It has nothing to do with reading charts or anything. This is just like you want to go against the crowd, which is fine, but that's just not my type of trading. Am I doing anything with Cisco earnings? Yes, earnings 235. Thank you for reminding me. Almost forgot. Yes, I do want to do something with earnings, and I do want to do Cisco. Yes, let's do Cisco earnings. They have been liquid, have been volatile, right? I would be inclined to do a butterfly again. Maybe finance it with a credit put spread. Let's see. I mean, lately I've been having long, strong signal, strong rally here, and kind of pull back, big drop, rally. I mean, it's a mixed bag, right? Cisco is kind of a mixed bag. It's considered to be a proxy for the economy, because how much S&P 500 companies, most of the S&P 500 companies have Cisco equipment, and they, it's a good barometer of how much capital expenditures S&P 500 companies have. All right, doesn't matter what Vlad thinks. Let's see what the crowd thinks. We're at 59, 5% one standard deviation, 2% is 10 standard deviation. You can move 10%, but 61, 62. I mean, you have 63 strike. You have open interest at 70. That's a lot. That would be 10%, but more than 10%. Somebody's buying that 70 strike. Could act as a magnet. Let's see, do I have it in earnings power trader? Let's just double check. I do have it. Okay, so trade option, Cisco. Okay, so I like one standard deviation is probably where I want to have my call, right? So 62 strike, 5% 62, maybe this guy 63 strike. 63 strike. Let's see, butterfly. Let's do $3 width. And we start at 62. So 62, 65, 68. 62, 65, 68. So one standard deviation move, you can buy it for 30 cents. And then actually we have the improvements we're working on with bar chart guys. So if you do butterflies, long call butterfly, let's do Cisco. And let's do middle leg of, what do we do? 65. 65 strike price, 65, 62, 68. So you can actually see the profit and loss chart, right? So this is how it looks. Let's make sure it's correct. Still staging. So max profit is 270, right? Max profit is 270. That's this guy. 270, and the max loss is 30 cents, which you can see on the graph. $2.70. You have 9-to-1 payout, 17% probability, right? So the idea is that we want to show you the inverse probability, right? So here, your profit is $4.16. That's the maximum profit at the 65 strikes. But your payout is sorry, 60. This is what strike. I don't think it's the right strike. Really, no, 65. Right, so 65 is the maximum profit, but the probability of that is the smallest, right? So that's what it's trying to show you. So the blue line is the profit probability, right? So the maximum profit is where it's going to stay, right? And but the payout is smaller. And I probably have it in reverse, but okay, I have to test that. Okay. I think it's in reverse, but that's the idea, that the probability is smaller, right? 65, like you can see here. %. You can see probability is 48%, but here probability, I just doesn't update, so I need to test this. Okay. So we'll fix that. But that's the idea of profit and loss, right? The profit loss is correct. So for 62, I did 62, 65, 68. $2.70 is your maximum profit, and then 30 cents is your maximum loss. And that's what you're seeing here. Any questions? Okay, so that's so I got filled for Cisco call spread 62, 65, 68, implying that if it moves at least one standard deviation or two, then this strikes will be covered. I don't know which way it's gonna move. I mean, I have bullish bias, they're just based on market conditions, but you know. So then if I moved 65 to the right, then I need to move 55 to the left. So 3 strike differences. So the put spread would be 55. That's no, it's 65 is $6, so 6 to 53. 53. So 50, 53, 56. And so 65 is all-time high, and then 53 would be 50-day moving average. 53 would be 50-day moving average. And you do have a lot of position at 55. So 53, 50. I think I can go 49. What I do see a lot of position here. 55. Maybe we'll do 55, 52, 49, with the idea that 55 will hold. Let's do 55, 52, 49, with the idea that this is the highest position at 55 strike. Right, the highest gamma, and will stay there. Can buy $3 with butterfly for 19 cents. Okay, maybe 20 cents. No, I'm not getting it. So annoying. Okay. Any questions on Cisco? So to the downside, one standard deviation move to the upside, this should be a profitable trade. One standard deviation move to the downside, this should be a profitable trade. If it's a muted reaction, then my maximum risk is 53 cents. Buy strange weakness. Okay, Fred. Keith reviewed 61, 63, 65. And then 57, 55, 53. Okay. And the closer you are, the difference is this graph, right? The closer you are, right? The closer you are to where the stock is trading, right? This is 55 strike, right? This is 60 strike. This is 62 strike. Then the higher the probability of success, right? The probability of success will increase, but your payout will decrease, right? That's what these curves are supposed to show you. Right now, it's a little bit misplaced, but that's the idea, right? You can see how the lag is shifting right to the right. This is 60 strike, this is 62 strike, this is 63 strike. But yeah, so that would be the Cisco trade. Any questions on Cisco? And strike preparation, the Cisco butterfly. I got it. Okay, got it. Okay, I'll leave the screen on so you guys can look at these butterflies. All right, let me do my personal account as well. I actually like this trade. So COVID is 62, 65, 62, 65, 62, 65, 68. Sixty-two, 65, 68. Let's see. Okay, and on the downside, what's the middle strike? 652. So 52 strike 52. 52, 55, and 55, 52, 49. 55, 52, 49. 49 might not have only penny, 19 cents. Probably want to go a little bit further, 53. 56, 53, 50. I mean, yeah, penny difference. Okay. 32 cents. So that's Cisco. Any questions on Cisco 250? Do we have time for one more? This is what, Wednesday after the close. Cisco, HP, not liquid, not liquid, not liquid, not liquid. Not liquid. Tomorrow, Disney. Oh, I do like Disney. Disney is usually volatile. Let's do Disney. Disney has been struggling. soft lows. Earnings are usually pretty violent on the upside or downside. What do people think? One standard deviation. So let's select 110 strike. So let's see, let's start with 110 strike. Okay, 110. $1.10 is about $1. That's expensive. We start at 110. So we start. We move to 105. $115. So 110, 115, 120. That looks right. So 110 is where the highest open interest, and then 115, 120. So this butterfly, basically, again, one standard deviation that will go to 110, 115, 120 level. 42 cents. Expensive. Okay. So that's Disney, and same thing. We'll probably do it on both sides. So if I did 115, so 85 strike, it's probably too low. Yeah. Not a lot of demand for puts, so you do have a skew toward the calls. So 90 strike, middle 90, start was 95. 90 looks good, 95. So 95, 90, 85. That looks right. Oops. Any questions on Disney? One standard deviation move, where the high open interest, where the strikes are. So for the calls, you can clearly see a lot of position in 115, 110, 115, 120. So positive news, I think that's where it's gravitating. Negative news, nobody's buying puts, right? Nobody thinks it's going to go down. So that's when you either do debit vertical spread or maybe put spread in case everybody's wrong. So, okay, so what did we do? We did Cisco. And we did Cisco, and we did Disney. What else do we have? JD. JD is also pretty liquid. JD. So we have Disney, and then we have JD. So Chinese stocks are going to start announcing earnings. That will be interesting. It looks like an FXI chart, right? It looks like an FXI chart. A lot of expectation in these Chinese names, so probably going to be a violent move. One standard deviation is 10%, two standard deviation is going to be 20%. So it could move up to 10%. 10% would be 39 strike, 40, and 2% would be 44. You already see kind of large positioning at the 45 strike. So maybe we start at 40. So where the largest position is. And then we move to 42. Maybe 43 and 46. Can do it for 21 cents. So it looks like 40, right? You want to start with the 40 strike because this is one standard deviation and very large position here. I mean, the largest position, 5 million contracts, pretty large. And then with the idea that it will stay here or will gravitate somewhere between 42 and 43. And on the downside, not a lot of interest to the downside. So if I did 40, 43, 40. So now I start with 30. If I want equidistance. Let's see, 430 strike. No, I start with 30 strike. Start with 30 and let's see. Very cheap, okay. Very inexpensive. So 32, let's see, 31. 31. 31, 26. No, it's not like what, 27, 28, 29. 30. So you have to go 32 at least. Okay, so 32, 30, 28 sounds like a put spread because there's just not a lot of demand and it's not very liquid. 29. 31. So 33, 31, 29 put is what I'm doing. So 33 is right where that one standard deviation move. Right, any questions on JD, Disney? All right, it's 2:59. How are we finishing this lovely day? It's documents so JD, Disney, and Cisco. Those are the stocks. Shopify. Close Shopify too early. Huh. Who would have thought? Shopify continues. I'm out of Shopify. I don't need to watch that anymore. Texas Instrument down 3%. WMB down 2%. LA Lele, Google. Mixed bag. And spiders are flat. Okay. Thank you very much. And I will see you tomorrow.